Hi traders, it's Roberto, and this is the analysis, the update on the trades that were taken on November 22nd on Friday. And I apologize, I could not log on to the webinar on Friday morning. I had technical difficulties. Mainly the internet wasn't working. So it's working now, and I just wanted to send this update and just go over the trades that we took. One note before I begin: if you cannot participate in the Asian session webinar, all you need to do if you are in Europe, or if you cannot trade Asian session, then all you need to do when you start trading the London Open, just log on to the trade room archives, and the signals are there. So usually these trades aren't really valid till the London Open, even though we do take these trades during the Asian session, and they're still valid when the London Open. So just if you don't know the trade room access, just email me and I'll send you the link. So these were the trade setups. Again, remember we started out early in the year using a moving average line, pivot points, and taking trades below the central pivot point coming into a new trading day. As long as price is below the central pivot point, below the moving average line. Now we added the cloud, Ichimoku cloud. So price gives us more confirmation. Price is below the cloud, below the central pivot point, and below the moving average line. This is a 10 moving average line. You could use a 21. I like using a 10 because the 10 is actually an entry moving average line, where the 21 moving average line gives you directional bias. I like using the 10 because it tells me when to get in the trade. For example, here I would have taken a trade when it broke below the 10 moving average line. This is a 4-hour chart, so I confirmed this. I need 2 time frames. So I've got the 1-hour chart coming into a new day. Price is below the cloud, price is below the central pivot point, and price is breaking below the 10 moving average line. So I would take this trade. Now price is finding support. It's done its daily range. It is Friday, and it's already put in its daily range, but we do know that our target is around 91 or 90, because we have, if we look at the daily chart, we have a head and shoulder pattern that has developed. It has broken below the neckline right there. Just make it a little smaller so you can see. Here's a head and shoulder pattern. On this pair, here's the head, and here is one shoulder, and here's the other shoulder to the left. And this is a reversal pattern. So let me make it really small here. This is a reversal pattern. This is the neckline. The neckline has been broken. So technically this trade should go down about 400 or 500 pips. Okay, so I'll be staying in this trade. I'm not exiting until it gets down to about 91 or 90. Okay. The other pair was pound Aussie. Let's go to the 4-hour chart. Again, here was a new day. We went over this yesterday. Price was above central pivot point, above the Ichimoku cloud, and above the moving average line. On a 4-hour chart, we check this on a 1-hour chart. Same thing. Price is above the cloud, above the central pivot point, and above the moving average line. We take a trade. What is the projected range? The day before, 24-hour session, managed to put in 336 pips. And today, so far it's put in 220, 100 pips shy of its projected range. It is Friday though, so we should expect some sort of pullback on a Friday. The other pair was Euro Aussie. And again, coming into a new day, it mirrors the pound Australian dollar. Price coming into a new, here's the Australian market right here. Coming into the Asian market, price is above the cloud, above the central pivot point, above the moving average line. projected range the day before at 244 pips, and it just about done its daily range. Okay. I'm still in the pound yen and still in the Swiss yen. So let's look at the pound yen. Pound yen, it took a while to take off. You notice here was the trade right here, and it dipped, and then it just put in about 60 pips. Hasn't really moved much, but it is Friday and it's a bit overbought. But again, price was above central pivot point, above the cloud on the 1 hour and the 4 hour chart, and that's what we need. We need price to be above the cloud, above the central pivot point on the 1 hour and 4 hour chart. We're still in an uptrend, and the moving average line is slanted out. Okay. The other pair was Canadian yen, and I didn't put down Swiss yen, but Swiss yen was another pair. Now Canadian yen, we're still in an uptrend, but the market dipped. It retraced actually, so we could not take a trade. We could take a counter trend trade. And I didn't take this trade, but the market did sell off. We're still in an uptrend on the higher time frame, and notice that it bounced back and gave back all the losses. So this would have been an excellent counter trend trade because it was below the central pivot point, below the 10 moving average line, and you could have taken this trade for a short scalp, but it recovered, and now it's finding resistance. So we don't know. It is Friday. Fridays are usually retracement days, so we don't really have a trade on this pair right at the moment. The other pair was the Swiss yen, which I did take, and I'm still in this pair. Again, notice price, and this often happens when the market, this was yesterday, this is Thursday, market went up 169 pips, and what happens? It retraces. Retraced about 40 pips, price was still above the central pivot point, still above the cloud, and turned around, and this is the London and New York session, 117 pips. We do our top-down analysis. We make sure that price is above the cloud and the central pivot point and above the moving average line. That's directional bias. We have a 1 hour and 4 hour chart telling us essentially the same thing. We take the trade in the direction of the higher time frame. Okay. And the last one, it was the Aussie dollar, and here again, price below the cloud, price below the 21 moving average, I'm sorry, the 10 moving average line, and below. I mean, I know we've been using a 21 moving average line, and you can certainly use a 21 moving average line. I just like the 10 moving average line because it really doesn't matter what moving average line you use. You can actually use both, or one. It's just you just use it for a directional bias. The moving average line needs to be slanted down or up. That tells you where the market is going. So here, price is below coming into a new day. Let's make this a tiny bit bigger. 4 hour chart, we do a top-down analysis. Price is below the central pivot point coming into a new day. Price is below the cloud. Price is below the moving average line. We take a trade in the direction of the 4 hour chart. 1 hour chart, we see the same thing. Price is below the cloud, below the central pivot point, and below the moving average line, so we naturally will take a trade heading south. Okay. So that's it. Thank you for watching the video. I'm sorry again for not being able to be in the trade room today. We will meet on Monday. Remember, the new trading hours are from 7 a.m. to 11 a.m. Monday through Friday, and 7 p.m. to 9 p.m. Monday through Thursday. So have a good weekend, and I'll see everyone next week.